Okay. Camera. Good morning. Can you hear us? If you can, please give us a thumbs up in the chat group. Okay, I think people can hear us now. So we're about to start. Good morning once again, everyone. I would like to welcome you all to this virtual press conference as BK Group PLC presents its Q3 and 9 months 2023 financial results. My name is Bob Rutarindwa, and I'll be moderating this virtual press conference. I would also like to thank you all for joining us today. With us today is BK Group CEO, Ms. Beata Habyarimana. We also have Bank of Kigali CEO, Dr. Diane Karusisi, and BK Group CFO, Anita Umuhire, who will take us through the financial results. Now, after the presentation, we'll also have a Q&A session, and please feel free to send in your questions as they do the presentations. Definitely, they will be also answering your questions as we move along. Now, allow me to invite BK Group CEO Beata Habyarimana for her opening remarks. Thank you. Beata, floor is yours.
Thank you, Bob. Good morning, everyone, and thank you for attending this call. We are happy to share with you the Q3 performance for BK Group and to take you through the different figures of what has been done during these last 3 months. But before we go through the performances, maybe giving you just an outlook of how the economy is, we are now happy to see that there is impact on the economy through the monetary policies the country has been conducting, where the GDP has recorded an economic growth of around 6% for this quarter 2023, with a strong, robust economy. And we're happy to see that the areas driving this economy, be it the service sector, with a 10% growth, the wholesale and retail trade, are key elements for which BK Group is also supporting deeply in financing. We have also seen that the industry sector has a growth of 6%, for which also BK Group is financing intensively, though we have been noticing that the agriculture sector remain unchanged with the unpredictable weather condition, and this leading to lower harvest and also impacting the production. Other good news are related to the headline inflations for October 2023, where we have been witnessing an ease from 13% in September to 11.2% in October 2023. And even if it is still be not yet to the national targets of 2 to 8%, we noticed that at least the central bank rate has been maintained to 7.5, which is really a confirmation of the current monetary policy stance continuing to sip in the economy and bringing down the inflation. For today, we have also been recording happily that BK Group has been, in August 2023, recording a GCR rating, for which, for the short-term rating, BK Group had a A1+, and for the long-term rating, a AA. This is also a good confirmation of stable outlook, stable earning position, and a stable risk position. For today, we are happy to announce that BK Group Quarter 3 2023 financial performance has recorded a very good net income of 55.1 billion Rwandan francs, equivalent to $45.3 million, and which also translates an increase of 26% year to year. The key metrics of all the subsidiaries being positive in growth. We are also glad to announce that the board of directors of BK Group has also decided to have a dividend payout, an interim dividend payout of 8 billion Rwandan francs, which also means a payout of 8.44 Rwandan francs per share, and which is expected to be paid down or about this month of December 20th. So we are still very committed to bring value to our investors and to also bring more attractiveness to BK Group shares. I will pause here, and the CEO of the bank and the CFO will also take you through the business highlights and the financial performance. Thank you.
Thank you, Beata. I'll share some highlights of the performance of the bank. As you've seen in the press release, net loans and advances have increased by 15.8% year on year, which is a strong performance. And clients' balances and deposits have increased by almost 12%. This shows that there are still a lot of opportunities in the market for us to grab as a bank. And we've also seen the recent news around consolidation in the domestic market is actually bringing us more clients, which is good news to us. In terms of quality, asset quality, our NPL has increased to 4.3%. This is due to one large facility that has been downgraded. But the good news is that we had been taking provisions as we were anticipating this facility to be downgraded, and our ECL, or cost of risk, has not increased significantly and remains reasonable at 2.2%. I think something that is important to note is the recent depreciation that has reached, I think, about 12% year to date. I think this is something that has not happened in the past many years, probably over 10 years. The good thing for us is that we don't have a big exposure to foreign exchange. Our forex exposure is maintained below minus 10% at 9.6% negative as at the end of quarter 3, which shows that we've remained prudent. We continue to do the bulk of our business in local currency. The only thing that is hitting us is on our OPEX, because we still have a lot of contracts with foreign suppliers or service providers in foreign currency, and this is clearly increasing our costs. And we are in a drive to improve cost efficiency going forward, because we believe this depreciation will continue to hit us in the medium term at least. So that's what I can say on our performance, and I'm sure my colleague Anita will share more details on the bank's and the group's performance for Q3 2023. Thank you.
Thank you, Diane. I'll take you through a quick performance highlights for the third quarter of the year. The third quarter of the year contributed 18.2 billion in after-tax profits. This brought the total profit after tax year-to-date September to 55.1 billion, marking a 26.7% year-on-year profit growth. Looking at Q3 highlights, the third quarter's performance was a continuation of the good performance observed in Q2, and this was mainly supported by three pillars. The first one being a continued strong performance in net interest income, with a total contribution to operating income of 72%. The third quarter saw very good earnings on the retail loan book. We observed an 18% quarter-on-quarter increase. The third quarter also saw a very good performance in remunerations on foreign currency excess liquidity that was placed with other banks. However, there was a notable increase in interest expense due to the higher cost of funds, which for Q3 was 3.6%, up from 2.9% in Q2. Secondly, Q3 also saw very strong recovery in non-funded income. We were able to add 3.6 billion to FX-related income. Non-funded income also was further supported by a 25% quarter-on-quarter increase in non-lending fees and commissions, especially on fees collected on our digital channels. Lastly, net provisions for Q3 were almost half of those for Q2, and this was driven by it was a reclassification from provisions to OPEX, but as well as recoveries close to 700 million for Q3. Operating expenses were 3.5 billion higher in Q3 compared to Q2, marking a 20.4% year-on-year increase. Our operating costs continue to largely support our people cost, but also the cost related to sustaining and maintaining our tech infrastructure, as well as costs related to the payments business, especially on facilitation of cards payments. Looking at the statement of financial position as at the 30th of September 2023, total assets are 1.99 trillion. We are 20 billion shy of the 2 trillion mark. We've grown 13.3% year-on-year, mainly funded by the growth in customer deposits, which are 1.26 trillion at the end of Q3. Loans and advances, as mentioned, recorded a 15.8% year-on-year increase, and this growth is mainly observed in the retail segments, as well as good growth in the SME segment as well. With the increase in deposits, we will note that investment in government securities have also increased to the tune of 183 billion at the end of Q3, which is almost the same portfolio size that we had at the end of last year. You will also notice that balances with the National Bank have decreased, while the due to banks balance has increased, and this speaks to the comment earlier of having placed excess foreign currency liquidity in earning assets. Quickly looking at our ratios, return on average assets at the end of the third quarter is 3.9%, up from 3.5% same period last year. Return on average equity, 22.4%, up from 19.5% the previous year. Non-funded incomes contributing 32.6%, with the cost of funds, as mentioned, of 3.4% at the end of Q3. NPLs, 4.3%, the cost of risk of 2.2%, and our capital adequacy ratio at the end of quarter 3 was 19.6%. Those are the key highlights that we can share. Thank you.
Yeah, thank you very much, Anita. Thank you, CEO Diane, and thank you, CEO Beata, for taking us through the 2023 Q3 and 9 months financial results. And now we get into the session, part of the program where we now get into a Q&A session, and then we receive questions, and then our panelists will be answering them. Now, as we wait for the questions, please feel free again to send in your questions through the chat bot, and then they'll be answered shortly. Thank you. Yes, I think we have our first question from Juma, Soko Directory in Kenya, and he's asking, what was the main driver of the performance in the 9 months period? And he also has a second question, what is the performance outlook for quarter 4? CEO Diane or CEO Beata or CFO Anita? Yes, thanks.
Thank you. As mentioned, there were 3 main contributors to the performance we observed in quarter 3. So the first one was strong performance in unfunded income. We were able to grow our interest income, mainly, as mentioned, on good performance in the retail book, but also with placements made with other banks. Secondly, in quarter 2, we had a bit of a hit on non-funded income, which we were able to recover from with a good performance in FX-related income. I mentioned that we were able to add 3.6 billion to our FX-related income. Lastly, our provisions for the third quarter were almost half of, were 3 billion, which was almost half of what we observed in quarter 2. And this was also stemming from a combination of recoveries that were done, but there was also some movements from the provisions to OPEX. Those were the main key drivers, but especially on net interest income and net interest income as well as non-funded income.
Yeah, thank you, CFO Anita. I think CEO Diane, did you want to supplement that, or? I think there is a next question as well. Yeah, what is the performance outlook for quarter 4?
So I think that the performance outlook for quarter 4 is positive. We expect as a bank and as a group to hit our target, which is above 70 billion in net income, and we believe we're on track to getting there. We even hope to exceed slightly our target for the year 2023. Thank you.
Thank you, CEO Diane, for that great response. We have another question from Michelle Anzaya, and they're asking, are the investments in IT systems paying off in terms of operational efficiency? So that's number one. And then the next question is, what is your assessment of the bad loans book?
Thank you for the question. Indeed, the investments we made in IT infrastructure, but also in digital, are paying off. We now have close to 70% of our clients transacting on channels, which is a big improvement from where we were last year. but we're still far from where we want to be, which is at about 90% of all our clients transacting digitally. So that's something very positive. So it's allowing us to provide services, provide services remotely, and people can access our services, self-service channels, and it's enabling us to grow the bank without necessarily growing our branch footprint or even our staff. So that's something very positive. And you've seen our cost-to-income ratio stable. For the first time, I think, in a long time, it has hit 40%, but we expect that cost-to-income to remain stable, despite the fact that we want to continue growing the portfolio, but also our client base. Something that is important to note, and this was launched in the past weeks, is that now clients are able to open accounts remotely, digitally, from wherever they are, if they have a Rwandan ID. And we believe that's going to enable us to gain a lot of, to improve or increase our client base in the retail space. And this will go a long way in improving our, especially our non-funded income. The second question on the assessment in the bad loans book, I think, again, we have an NPL that is below the 5% mark, which is the reference from the central bank. So we believe we are in a good position. When we look at segments, we've been reducing significantly the NPL ratio for the retail book, which is now a single digit. Even SME book, it came from over 20% NPL and now is at around 12%. So this is very positive. We have some bad loans, and these are not macro-driven. These are really company-specific. And we believe, because of economic growth that we are seeing in the country, we believe that our quality of the portfolio will remain good and will remain below the 5% mark from the central bank. Thank you.
Thank you very much, CEO Diane, especially for highlighting that great development in the digital space. I think opening up accounts digitally is one of the great developments that we can be proud of. Allow me to also move on to the next question from Shadrach Nyakoe. And he's also asking, what is the economic outlook for next year in Rwanda and in the region? He also asks, what economic sectors in the group most focused on what economic sectors is the group most focused on going forward?
Thank you, Shadrach, for your question. When you look at the economic outlook for next year, we stay very confident, especially with the trends of the economic growth, which is sustained beyond at least 6% for the country in Rwanda. And also the way BK Group as a company is well positioned in financing the key drivers of the economy, especially for the areas of business and industry. But we're also expecting that next year, though the inflation is providing a good trend going down, but still might remain a bit beyond the targeted of 2.28% expected by the central bank. This due to many parameters, but basically external parameters as the geopolitical shocks we have, but also the trends in supply chains. Another element we are looking at and monitoring closely related to the effects of the climate change in the region with these heavy rains, and which might also affect the agriculture sector and the harvest expected, as well as the production. But we keep having an eye on that to see how the trends would be affecting from far or near the business. But we also expect that due to the region, especially the EAC, good economic trend, the investments will stay being attracted to this region. Coming again to what the group is focusing on for the economic sectors going on forward. Of course, there are some areas where we're well positioned in financially supporting, especially for the service sector, for the wholesale and trade, for the industry sector. Some of the areas are also moving quite quickly are related to digitalization and the fintech services we can provide through our subsidiary, the BK Tech House, which also reach out the non-bankers clientele. Another area we are also working on, especially would be on agriculture, for a specific big portfolio expected to be met by the bank, but also in terms of ensuring agricultural produce and also digitalizing, providing tools to the farmers through the BK Tech House. And the last area I would also highlight is on the ESG, where we are also, you should expect next year to have some big improvement as well, as an area we would like also to be among the pioneers.
Thank you very much, CEO Beata. And while you highlighted on the agriculture part, I think we also have a question that came in, speaking on the same. So Kelvin Majanga from Business Watch Kenya is asking, has the El Nino rains phenomenon yielded economic opportunities for the group in terms of agribusinesses and infrastructure repair financing? That is one question. And then he has a second one. He says, the group's total assets grew at a faster rate than the Rwandan industry banking assets. How did you outperform your competitors?
For the El Nino rains, the phenomenon, I wouldn't say that it we consider as an opportunity, but rather saying that for the moment, it didn't come for an impact directly to the businesses of the company. Though on the other side, the company has clear strategy for agribusiness and for mechanization. In that area is what I would maybe comment related to that phenomenon. For the assets which are growing faster, I'm not well getting the point if it is a problem or not, but when a company is performing well and growing in terms of assets, I would say that it's just the penetration of the market and appreciation of the market on our products, but I wouldn't compare to the competitors because also others are recording also a growth.
Thank you, CEO Beata, for those great responses. We have another question from Ford Nate. I don't know if I've butchered your name, but I'm so sorry. And then they have a question, they're saying, would you please comment on the performance of the other subsidiary businesses other than the bank? And the second question is, are there any expansions or capital raising plans in the immediate to medium term? Thank you.
We have been talking about the performances of the bank, but we are also happy to see that there's a good growth for the other subsidiaries, starting with the general insurance, where we have been able to record a growth of 16% year to year for the profit of the quarter. We have also keep recording a good growth rate of 26% for the insurance company for the gross premium. And we think the way the key prudential ratios are also being compliant is providing confidence in terms of solvency margin, in terms of claims ratio, and in terms of return on equity and assets. For the BK Tech House, which is basically working on the fintech and digital solutions, we have revamped the strategy of the company, which has also been approved this last quarter, to expand and enlarge the activities and the reach of the company, with a specific increase on the revenue growth of 22%, as well as a growth of 16% in net operating income. We are happy to see that the market appreciates some of our star products, especially those related to the payment gateway, the Urubuto as an education product, as well as the key role BK is playing for agriculture, providing solutions to the farmers through our agriculture platform, which is SNS. For BK Capital, we're also having good key metrics, showing that the revenue stood really at 140 million. We are happy to see that the appetite for assets under management keeps growing for a 66% year on year. And we can see that still on the LSE market share, we have a sustained market share growth, though we still welcome any other activity which would be attracting our shares. I would also maybe highlight on the BK Foundation, which keeps playing its role as the CSR arm of the group, with different activities which you could expect to be seen clearly in the annual report. But the focus is on the CSR activity in general for education, innovation, and environment protection, and also a specific touch on ESG.
Thank you very much, CEO Beata. We have another question from Juma from Kenya, and he's asking, how is the business doing in Kenya? And has the performance of the Kenyan shilling affected it in any way?
We didn't notice any particularity with a negative connotation for what we have in the business in Kenya, as we keep seeing a good appetite for the business. This is what I think I would say, but I didn't see the other portion of the question.
I could repeat the question. It's fine. He wanted to know, has the performance of the Kenyan shilling affected it in any way?
No, it did not. It did not.
Okay, great. Thank you so much. And then we have another question. This is from Olive Nete, representing Rwanda Broadcasting Agency. And she's asking, in light of the persistent inflationary pressures throughout the past 9 months that CEO Beata mentioned, could you highlight the strategies that BK Group employed to mitigate the impact of rising supply chain costs on the company's overall financial performance? That's the first question. And the second one, how is BK Group measuring the success of its digital initiatives? Thank you.
Thank you, Olive Nete, for your question. I think all of us have been affected with these inflationary pressures. Not just BK Group, but any company on the market is being affected, and we look for different ways of mitigating and reducing, but not eradicating fully the impact of this inflationary pressure. One of them is basically related to the fact that the monetary policy itself was bringing down or trying to keep down the inflation. On the other side, it's more on working on cost efficiencies internally to really limit what would be needed, though we have already some commitment or contracts related to supply chain for which we have to provide and to fulfill. On the other side, for the financial performance of the group, it's more about providing more services to the clientele, so that at least they are not affected that much. We can see that the interest rate has been relatively stable for this period. When it comes to the way the group measures its digital initiatives, you basically see it in the cost efficiency, which can go down due to the digital activities in place. If you have anything maybe to add on.
Yes, I'm happy to add how we measure the success of our digital initiatives. So I said earlier that 70% of our users are transacting on channels, which is quite positive, although we want to take this number to 90%. We also look at the number of digital transactions versus paper-based or branch transactions, which has exceeded 85%. So this shows that more transactions are going on channels, and we want to see, of course, this number growing. The other measure we look at is the back office journeys that are being automated. For example, in the payment space, we want settlement to be done automatically and reconciliation to be automated, etc. This we've achieved to a great extent. The other metric we are looking at is how we digitize the front office journeys. For example, I said earlier that people can open an account digitally. You can open a savings account, you can place money, you can pay, transfer, you can apply for a loan. All of these journeys have been provided on channels, which is great. I think where we need to go is to be able to offer all journeys, all services of the group digitally. So typically we would want a client at BK to be able to buy a policy online. We would want a client at BK to be able to buy bonds or stock online. And this is, the journeys that we want to automate going forward, and we hope that by end of 2025, that's our target, to have automated all these journeys for BK client to receive all services of the group digitally. Thank you.
Great response there, Diam. Thank you so much. And we have our last question. I think as we wind up, we have another one from Jackton Lawi from the Star Kenya, and they're asking, you recently joined the NSE 25 share index at the Nairobi booth. What does this mean for the BK Group?
Thank you, Jackton, for your question. I think for us it was all about good news, as it translates a fair appreciation of joining the NSE 25 share index. And I think it's also a signal and a message to our investors and to our shareholders of being qualified, so like having a company which has a sustained yield, which is providing a stable outlook, which is providing a stable and good expected future outlook, which is also showing a stable earning position, which is also giving a confirmation on how the different risks are being mitigated. So I think it has been a strong signal, not just for us as a company, but basically for our shareholders being able to, who decided to trust us and to go for this journey with us. It came in the same time with a different GCR rating, and for which is still again a signal for the confidence we appreciate from our shareholders to be put in us and shown through those figures and those ratings.
Thank you so much, CEO Beata. I think now we come to the close of our press conference. I see as we do not have any other questions. Allow me to invite BK Group CEO again to give her closing remarks for the press. Thank you.
Thank you, Bo. By closing, I would like to thank you for the interest you all pay to BK Group and the way I've been sitting with us for this call. But especially would like to, again, call upon our shareholders, thanking for their trust in us, but also anyone who would like also to acquire, to be part of BK story through our shares on the different stock market to show interest, because we are committed to provide the added value to our shareholders. We are committed to be playing a key role in the economic growth. And I will also close by thanking the whole team which does it through BK Group. Have a good day.
Thank you so much, CEO Beata. And thank you very much to our media partners who tuned in today. Much appreciated as well for our panelists, CEO Dian, CEO Beata, and CFO Anita. And till next time, thank you.